Washington, D.C. The U.S. inflation report from last week, which showed slower price increases, heartened Lael Brainard, the Vice Chair of the Federal Reserve, who predicted that the Fed will soon scale back the size of its interest rate hikes. Preliminarily, the inflation data was encouraging, according to Brainard. Moving to a slower pace of rate rises will probably be prudent soon. In contrast to several of her Fed colleagues last week, Brainard expressed more enthusiasm about the inflation number during a discussion at Bloomberg. The euphoric reaction of the stock market to the better-than-anticipated inflation report, which signaled that the exorbitant price increases of the previous 18 months were decreasing, has been attempted to be restrained by certain central bank officials. After last week's inflation report, key Board of Governors member Christopher Waller said on Sunday that everyone should just take a deep breath because it was just one data point. Before we can consider letting up on the brakes, Waller added, we're going to need to see a continuous run of this kind of behavior and inflation slowly starting to come down. On Monday, Brainard noted with approval to a drop in the price of goods. Prices for used automobiles, clothing, and furniture all decreased from September to October. The unclogging of previously clogged global supply chains, which had led to inflation surges earlier this year and last year, was reflected in those price drops. The vice chair of the Fed remarked that it may take some time before rate increases have an impact on the entire American economy. The Fed would have time to assess how its earlier rate increases were performing if rates were raised in smaller increments, Brainard has said in the past. According to Brainard, as the Fed's policies start to limit growth, the decision makers will start to weigh the possibility that they might raise rates beyond what is necessary, sparking a recession. Risks become more two-sided as we get into restrictive territory, or further into restrictive territory, she said. In other words, there would be a dual risk that either inflation would continue to be too high or the Fed would abruptly slow the economy. Brainard emphasized in her statements on Monday that the Fed will keep raising rates in the upcoming months. What needs to be emphasized, according to Brainard's remarks on Monday, is that while much has been accomplished, there is still work to be done in order to gradually reduce inflation to 2% by hiking rates and maintaining caution. That was an allusion to the Fed's 2% inflation objective for the year. Chair Jerome Powell hinted earlier this month at a news conference that the Fed might reduce rate increases to a half point as soon as its meeting in mid-December. From a historical perspective, that would still represent a significant increase. The Fed has historically changed interest rates by no more than a quarter point. Several Fed policymakers attempted to calm the excitement last week after the market's jubilant reaction to the inflation report. The president of the San Francisco Federal Reserve, Mary Daly, stated that 1 month of data does not a win make, and I think it's really essential to be thoughtful that this is just one piece of positive information. Although the inflation figures were a welcome relief, Dallas Fed President Lori Logan stated on Thursday that more Fed rate hikes are imminent, albeit perhaps at a slower pace. Brainard mentioned additional indications that inflation pressures are easing in her remarks on Monday. She pointed out that 2 measures of employee pay have revealed a slowing in wage growth. Although Powell claims that rapid wage growth is not a major factor in inflation, pay increases can continue price increases, especially in industries like restaurants, hotels, and airlines where businesses pass on the cost of higher labor to customers through pricing increases. In addition, Brainard stated that the demise of the FTX cryptocurrency exchange and its impact on other aspects of the crypto world, such as lender BlockFi, demonstrate how highly concentrated and interwoven the cryptocurrency market is and the necessity for strong regulatory guardrails. The fact that small-scale investors are suffering losses is really concerning, she said.